Backwardization. Backwardization is a futures market condition where the futures price are lower in the distant months than in the nearby months. Bar chart is a technical tool plotting price movements of a commodity over several consecutive time periods. Basis grade. Exchange authorized quality grade of a commodity that can be delivered against a futures contract. Basis. Difference between the price of a cash commodity and a futures contract price of the same commodity. Basis is usually computed between the spot and the nearby futures contracts. Basis point. Measure of a bond's yield equal to 1/100th of 1% yield. Yield increase from 5% to 5.5, rise by 50 basis points. Bear. A bear is an investor anticipating that the commodity market price will fall. A beta coefficient means to measure volatility of a stock or a portfolio of stocks in comparison with the stock market as the whole or benchmarked. A beta of 1 indicates that the stock's price move with the market. A beta greater than 1 indicates that the stock's price is more volatile than the market. A stock with beta less than 1 is less volatile than the market. Bid. Price at which a seller is willing to sell a futures contract. Broad order. Order that becomes a market order only if the market touches or breaks through the price order. Broad orders to buy are placed below the current market. Broad orders to sell are placed at the current market. Synonymous to if market touched order. Break even. Call spread. Call option spread in which the investor neither gains nor loses. The break-even point is calculated by subtracting the net premium from the higher strike price. Break-even point. We have two definitions. The first definition is the point at which an investment in futures, options, or futures contracts neither gain nor loses. Number two, or the second definition, is the price that a future might reach for an option buyer to avoid loss upon exercise. For a call, break-even is the strike price plus the premium paid. For a put, break-even is the strike price minus the premium paid. Break-even put spread. Put option spread in which the investor neither gains nor loses. The break-even point is calculated by subtracting the net premium from the higher strike price. Break-even straddle. Option straddle in which the investor neither gains nor loses. The break-even point is calculated by adding or subtracting the total premium to or from the exercise price of the straddle. Breakout is, in technical analysis, a movement of a futures price through a established support or resistance level. Broad-based index designed to reflect movement of the whole stock market. Example includes S&P 100, S&P 500, and the NAS area major market index and the Dow Jones index. A broker is, we have two definitions. The first definition is firm that charges A fee or commission for executing buy or sell orders submitted by an individual or a firm. And number two, the role of a firm when it acts as an agent for a customer and charges the customer a commission for its service. Number two, bucketing. Accepting customers' order without executing them immediately through an exchange. A bucket shop may use firm or other customer positions or orders to execute them, or may not execute them at all. Bucketing is a violation. Bull. And a bull is an investor believing that a security, a commodity, or market is rising or is expected to rise. Bullion. Bullion is ingots or bars of gold assigned at 0.995. I probably said that word wrong. Assigned, fine or higher. So a bullion is an ingot or bar of gold assigned at not 0.995 fine or finer. Bull market. Market in which prices of one or more commodities of securities are rising or are expected to rise. Bull market. Market in which prices of one or more commodities or securities are rising or are expected to rise. Buying a hedge. Purchasing futures contracts or futures option to protect against future increase in commodity prices. Cool. That's pretty much it. So buying a hedge, purchasing futures contracts or futures options to protect against future increase in commodity prices.